Welcome, ladies and gentlemen, on this conference presentation by 3U Holding AG. As Mr. Remke was so kind to mention already, 3U is a diversified conglomerate, a holding and management company active in 3 segments. And when we call it success in megatrends, we can claim indeed to be successful in the areas of renewable energies, e-commerce and cloud computing. I'll explain that a little bit later. Being diversified has some drawbacks. On the other hand, this year it did what it's supposed to do. It helped to minimize risk in the company because we were hardly impacted at all by any COVID effects, and right to the contrary, some of our business areas even had some tailwind from the situation. I'll give you some insight into what we're doing right now. The company was founded in 1997 and after some restructuring emerged in 2016 with this structure and group composition. Since 2016, we've been able to increase our profit year over year and also to increase our dividend year over year. And we feel that in this structure, with the strategic focuses we have and the side activities, we are pretty comfortable in moving forward and pursuing our path of sustainable and profitable growth. This includes, and to begin with, renewable energies. I'll keep that short. Renewable energies with 3U is the cash cow. We have pleasing cash and earnings contributions from power generation, from a solar photovoltaic plant and a number of wind farms, all in Germany. And obviously, this is a comfortable business model. When the wind blows, money comes in. When the sun shines, money comes in. The backside to it is that you cannot grow this business organically. So what we're doing there is we're buying and selling plants and windmills. This is going to continue also this year and next year. It is not of the core importance in terms of our strategic targets. The key strategic areas we are focusing on, management is focusing on, is e-commerce and is cloud computing, because these business models can grow organically through marketing, through winning new customers, through extending our portfolio of products and services offer. The 2 key subsidiaries in these segments are Selfio, an e-commerce company, which has grown since inception in 2011 from 1.5 million euro revenues to 20.6 million euro revenues in 2019. And we now see that the target of 24 million euros in 2020 is within reach. Even stronger growth you see from WeClap, which is our cloud computing company, providing a genuinely cloud-based ERP platform, which I'm going to explain a bit later. And although from a low level, WeClap has a CAGR of 100% over the past years. And as you notice, we expect 50% organic revenue growth in 2020. No inherent barriers to growth in that segment. Renewable energies, 60 megawatts with a market value of something between 40 million and 60 million. Looking now at the e-commerce business at Selfio, we are focusing on a niche segment that is heating, air conditioning, and water management. On that e-commerce platform, we sell those systems, and it's not just screwdrivers which we have there, but complex modules such as underfloor heating, which we purchase from OEM manufacturers and sell to do-it-yourselfers all over the place. It's a pure B2C business. So how do we differentiate ourselves in this segment? It's basically advice. Most people could easily be in the position to install an underfloor heating in their homes if they've got the right material and if they've got the right advice. The slogan of Selfio is do it yourself, but do it right. To get the materials, we help with our shop. To get the advice, we have a competitive and superior online marketing and online branding in place. That is, what we do there is we provide advice videos. We have an own YouTube channel, Selfio TV, where you find over 100 advice videos of all sorts, from the more theoretical stuff to the practical advice in doing some nice displays for your home. And right now we've got 8,000 subscribers for this channel. We've got over 23,000 followers on Facebook, 120,000 paying customers in fiscal year 2019, and growth still moving on. We've got some tailwind from the market in that respect, because the do-it-yourself segment is among the fastest growing in the German e-commerce industry. Still above average growth rate in the market of above 10% until 2030, the market experts tell us. And also we have in the backs of our minds to play an active role in the consolidation in that area. But focus currently is rather on cloud computing, and I'll come to that a bit later. So what's the strategy in that sector? Continue with our leading edge online marketing presence, more visibility, more traffic on our websites, on our Facebook and YouTube channels, with the target of gaining additional market share and pushing Selfio into the ranks of the top 100 online vendors in Germany. Please mark, there's still a long way to go. The threshold right now is at around 50 million revenue per annum. We're at 24, as I mentioned, so there's still a way to go. But whatever we do at 3U, we do it with ambition. And we tailor the strategies to help us realize our ambition and to take the necessary measures to get there. Not immediately, but over time. So we're determined to get there. We have to widen the scope of products and services, even thinking of an international expansion, which is not easy. And we are working towards enhanced profitability in this business. I come to that a little bit later when it comes to talking about numbers. Logistics optimization is right now a cost factor and will become a benefit over time. The gem and most important and of the highest strategic importance is our subsidiary WeClap. WeClap, with its genuinely cloud-based ERP platform, is technology leader, it is price leader, and we're determined to make it the market leader. Does that mean that we want to overtake SAP in terms of revenue next year? No, it doesn't mean that. What we are looking at is to become the preferred ERP systems of small and medium-sized businesses around the globe. So, again, this is a long way to go, but the steps we've taken and the basis we have in our product management and strategy make us confident that we're on the right track to get there. WeClap ERP platform, cloud-based, has a number of advantages over the legacy ERP 2.0 systems, on-premises systems. While those need to be installed on the servers of the individual customer, while they have to be customized, customizing the software to fit the company and the company to fit the software is a highly expensive business, as everybody knows, and the consulting industry has earned quite a few bucks in implementing such systems. The same is true for all updates, new versions, and what have you, which all again have to be implemented on location by the professionals. What's more, each of those systems bear the same name, but on the other hand, each one at each customer has the specialities and peculiarities of its own due to the customization. That is, they don't talk to each other necessarily. Again, last issue I want to mention, with such an on-premises system, you have data which are proprietary to the individual customer and which can only with much difficulty be pulled together to create the big data storage you need to develop artificial intelligence and other machine learning algorithms, for instance. This is different with a ERP 3.0 product, such as the WeClap platform, where all customers work on our servers. The data of all customers are on our servers, and with the permission of our customers, we can pool them anonymously to create a big data storage, which we can then feed into neuronal networks to create artificial intelligence algorithms. A system like WeClap can be installed easily because the key is only to migrate the data. This is easily done with small companies. It becomes more complex the larger the customer is, but we have a team to help the customer to migrate. I would like to give you one example. Last year we were in a pitch for a ERP system of a European wholesaler with subsidiaries in several countries. We were up against one of the big shots of the industry, a multi-billion provider of ERP software. And they said, although they claimed they were cloud-based also, they claimed that they need 18 months to get that thing up and running. We said it's 6 months, and we made it in 6 months. So there's a lot of money to be served by the customer, and this again is one of the competitive advantages our system has. When we claim that we have no inherent barriers to growth in the software, let me add one thing. In most competitor systems are based in their core on financial accounting. But financial accounting is national by nature. You have to comply with German commercial code, Austrian commercial code, Code Commercial in France, and what have you. So if you want to export this system to another legislation, you have to make changes in the core of your system, which makes this a costly and difficult exercise. By contrast, WeClap is based on merchandise management and covers all the basic functionalities and business processes you have. You have a customer, you have to send him some advertising, you have to send them proposals and offers, you have to accept orders, you have to purchase goods, produce wares and ship them, you have to have your service offering ready, up and running with a project management, say hourly billing and what have you, send out invoices and see to it that the cash comes in. So these business processes are alike all over the globe. And this is why we say international expansion for WeClap will be not easy doing, but possible to the extent that we'll be able to push it forward. That is, internationalization is one growth driver we are looking at. The platform, and again, this is an advantage of the cloud-based platform, is developed around a Java kernel and has open source surroundings. That is, our customers are entitled and encouraged to interact and to develop add-ons and plugins of their own, which then get attached to the platform after some quality control by our own development team. That is, what we see right now is we can open a store, a marketplace for such plugins where our customers exchange additional functionalities which are not at the core of the software, but are easily attachable and easily transferring data and activities to and fro. So again, this is a growth factor which cannot be underestimated. Our customers themselves contribute to growing the platform. This is an increasing activity all around WeClap. The market is impressive. I don't want to bore you with such details. We'll adapt that to new market research which has just come in. And we feel that improving small and medium-sized businesses is a task and a mission which we will help to achieve. The number of customers is increasing steeply. We have now crossed the threshold of 3,100 customers. About 1/3 is trade, retail, wholesale, and e-commerce. 1/4 is consulting and communications guys. We have a 15% share of manufacturing companies, and to highlight this, 19% of our customers are IT service providers. That is, the experts themselves say they don't find anything better in terms of price performance than WeClap. And what we're doing now in order to further accelerate our growth, we're trying to harness their enthusiasm for WeClap to make them sales partners and to make sure that they offer WeClap also to their individual customers. This is an exercise which we've started in late 2019 and which is gaining momentum right now. So what are we doing? Enhance functionalities, employ new sales concepts. You see that on the slide. Basic message I would like to share. Growth will continue. Organic growth due to the growth potential we have within that platform and by the customer community we already have. Further, we want to accelerate this growth by mergers and acquisitions, which we are currently evaluating. We have got a short list of 50 targets of German ERP companies, but we are looking beyond the German borders already. I have been talking about international expansion. This will be done mainly by exporting our successful online marketing to other countries, which is now going on right now, starting with Italian and moving on to French, Spanish, and English, of course. So the growth at WeClap is unimpeded. Let's look now at the financials, and I'll give you a brief overview of the first half of 2020. As you see, both champions within 3U Group, WeClap and Selfio, continue their growth course, growing again at high speed. And if I break that down in terms of our segments, you notice that revenue growth in all segments is impressive. The drawback, of which I would like to have a few words, is in the profitability of the heating, air conditioning, water segment. Why that? 3 reasons. One, the materials expense is higher than we would like it to be. We have issued a 12-point plan to change that. That will help a lot to change the product mix in that area, to install a own brand strategy, which is moving forward, and to look at purchasing and selling prices to optimize the product portfolio in that respect also. Second effect is our logistics. Our current distribution center has carried all that growth over all the years, but now has reached the limits of its capacity. So we're currently in the process of constructing a new distribution center, which is poised for more growth in that segment, and which will, through enhanced automation, lead to improved margins also. So we have identified the issues we have, and we are confident to get that segment into the black by end of 2021. So this is moving forward. Renewable energies, as mentioned, very comfortable business model, high margins, cash cow in the company, and moving, depending on weather conditions, in the right direction. The ITC segment includes also our legacy telephony business, but as you see, although also there we have growth in terms of revenue and in terms of earnings. So we're quite happy with that segment, which includes fast-growing, highly profitable WeClip. On group level, you also see we're heading in the right direction with strong growth on group level, also in terms of EBITDA, and also the net profit is moving up. So for that reason, we have, also, let's have a look at the balance sheet as of June 30, 2020. As you see, we have a high cash position, which is earmarked to some extent for M&A activities in the cloud computing area. We have a strong equity ratio, and it may be of interest to you that we have a net cash position, that is more cash in the box than liabilities to the banks. Free cash flow is, for some reasons, negative this half year, but this will be covered up in the second half of the year, reaching at least the numbers of 2019. We have confirmed, despite any COVID risks, our guidance for 2020, and we are quite certain that we will reach the forecast 58 to 62 million euro revenue on group level, that the EBITDA margin, which was extraordinarily enhanced in last year by 17 to 19%, which is a significant increase over the previous years. And also the net result will increase over 2017 and 2018. And I feel that we'll reach, in terms of net profit, the upper threshold of our corridor. So 2020 will be better than 2019, and our planning, which is currently underway, will show that 2021 will give another boost. Talking about what the purpose of the company is, and you see it here, we create value. Michael Schmidt, the CEO, is a 25% shareholder, so his interests are aligned with those of the external shareholders, and shareholder value is at the core of what we do. If you look at the shareholder structure, you will notice that management, as mentioned, holds around 30% share, and the company, having been in the hands of retail investors for years and years and years, now has for the first time a significant share by some institution. Lupus Alpha, fortnight ago, purchased the remaining treasury shares. We had 1.2 million stock, so we have a renowned small cap investor, German small cap investor, now in our shareholdership. Dividends are going to be paid, and as you notice, the share price has covered the losses from the COVID dip in March and is reaching all-time highs. Depending on the overall market conditions, we are quite confident that the market will ever better understand the potential we have in this diversified company with its 3 segments. So, moving forward, thank you. Join us, and don't hesitate to contact me for any questions, also on a bilateral basis. Thank you, Mr. Remke.